Pricing momentum in the global reinsurance market after the 2017 catastrophes turned out to be short-lived. Borne out first by the weaker-than-expected January 1 renewals, and then reinforced with a disappointing mid-year showing. For now, anyway, current reinsurance rates could be as good as it gets. With me to discuss this and the overall market is Senior Director Robert DeRose and Associate Director Scott Mangan. And Bob, why didn't the expected hardening of rates take place this year at either renewal point?
Well, the major reason for that really was the abundance of capacity that was in the market prior to the catastrophe events of 17 and then also following the events of 17. Following, the events, there was quite a bit of pandemonium and thoughts of a possible disruption in the market, whereby people were expecting alternative capital not to respond favorably to the events. That didn't happen. They actually performed quite well, and additional capacity came in. And that seemed to dampen the pricing momentum that was first thought of as a possibility following, the events in the fourth quarter. When we got into the January renewal, obviously competition was pretty intense. And as a result, while there was some pricing improvement in loss-affected covers, a broader market hardening did not occur as many were thinking.
Now, Scott, considering recent results, why does the sector continue to attract alternative capital?
Well, despite the 2017 catastrophe losses, there was a relatively benign period of about 5 years leading up to that where alternative capital made pretty good returns, and there used to be a thought that maybe alternative capacity was naive. I think that they've shown, as Bob has mentioned, that they're actually quite sophisticated and understand the risk and return dynamics of the property cat market.
Do you see alternative capital investors moving beyond property catastrophe?
Eventually, I think it will happen. I think that there are some challenges there. Reserving for longer tail lines, paying out claims over a longer period of time are challenges. It's not impossible, and there certainly is an appetite to get more into the space by the alternative capital.
Bob, considering the recent changes in the market, do you consider that reinsurance expenses are becoming an issue?
Well, the expense ratio has been behaving, I think, relatively well. It may have upticked a little bit in 16. Surprisingly, there's been a good amount of top-line growth. Now, that growth has been coming both from insurance opportunities as well as reinsurance opportunities. And I think that that's playing a role in making the expense ratio behave. But it's also interesting to note that reinsurers, many are making significant investment in insurtech and insurtech opportunities that they feel they need to make in order to really remain relevant over the long term. While that is a significant investment, it doesn't really seem to be impacting the expense ratio in a materially negative way. So, going into 2019, I'm imagining that the top line will show some growth. I mean, the global economy is improving, and that is going to present some opportunities. So my expectation is that the expense ratio will remain in line.
What does the future look like for some of the smaller reinsurers, Scott?
Well, it will definitely continue to be challenging. As we've seen M&A activity, there's fewer and fewer small reinsurers out there, and competing on pricing in the property cat space or in lines of business where it's more commoditized, it's going to be challenging. But there is a place for smaller reinsurers in terms of being a value add, helping companies bring new products to market, and those sorts of smaller customer-related value add type propositions.
Now, Rendezvous is just around the corner. What do you expect some of the major topics of discussion to be there this year, other than the ones that we just discussed here?
The major topic is always going to be around capacity and pricing. That's what the market players are there to discuss. What are the opportunities going to be going forward? But I think certainly some of the headlines may be around the recent announcement that Apollo is acquiring Aspen. I think that we're seeing more alignment between alternative capital and traditional capital. And that's been playing out over the past several years, and I think that that's probably going to gain momentum going forward. So that's probably going to be one topic. And then M&A in general, I think certainly, as the market remains challenged from a competitive perspective, most organizations are trying to figure out what they need to do in order to, sustain themselves in the current market and grow. And if organic opportunities really don't present themselves, then M&A is always an opportunity. So, barring any events that may occur between now and then, I think that those are probably the two major topics of discussion. But I'm sure there'll be others as well.
Thanks, Bob. Thanks, Scott.
Thank you.
And for AM Best TV, I'm John Weber.